Hi guys, welcome to this week's video. I'll be going over what we are looking at for the next week, what's coming up, and I'll break down a couple of the charts, what I'm gonna be watching, what levels I'm looking at, and then we'll also go over all the market data that's coming out, and we are going into some of the earnings seasons as well. So I'll share what my thoughts are, where I think we are headed to it. I hope you guys are enjoying these videos. Please do like and subscribe to it. Let's look at what we have coming up in the next coming week. All right, so here we have the economics report that is coming out. So we do have Cleveland Feds talking, the Chicago Feds talking as well. So we got two different Feds talking tomorrow. And then Tuesday, you definitely want to pay attention to what does the New York Fed's 5-year inflation is expected to be at, and then the small business index that will be coming as well. Cleveland Fed's guy, he's pretty good. So I would definitely pay attention to what he has to say during the noontime. But the few things that are important is come Wednesday and Thursday. So we do get the FOMC minutes on Wednesday. So make sure you watch that 2 p.m. Eastern time. And then we have Thursday is where we get the core CPI number and year-over-year number. So I was reading a couple of the reports where, the Cleveland Feds are projecting the CPI to come at 6%. I think that's way too low. They're being very, I don't think so. We would come around 6%. I think we would probably see it somewhere at that 8% mark is what I'm assuming that we will come close to 8%. So that's what I'm gonna be watching. But Cleveland Feds have been pretty good at their projections so far. So we'll see. But if they are saying 6%, we will see then market have a pretty nice bounce, because so far everybody is pretty scared that it's gonna be we're going to be going more and more down. So if that surprises us, you will definitely see that bounce in the market. And then with the new model that they have come out with for the GDP, and they're suggesting the growth is going to be at 2.9%. So again, we're going to have to wait and see how does that come. But if these CPI numbers are coming anywhere, in the 8 marks of it, I don't think so. The Feds are going to slow down or even cutting any of these rates or even pausing it. So I would definitely be paying attention to all of these numbers that are going to come up, because that's going to set the tone for the next quarter as well. And the other thing, keep in mind, is some of these big earnings that are going to start to come out is I remember in Q2, they lowered their guidance. So if they start coming out that they're beating their earnings and they're doing better than expected, also keep in mind that the guidance was lowered. So overall, they're not really doing good. But because they lowered their guidance and now they're able to beat and doing better and expected than better, then you will see, market might take that as positive news and start running. But once everybody realizes, the guidance was already given lower, and then also pay attention to what kind of guidance are they giving for Q4 as well. So all those things are going to go hand in hand to see what's happening. And then the other thing is, as long as the 10-year and the 2-year yield is inverted, we have not seen the bottom of it for the market. So you also want to pay attention to your 10-year and 2-year to see how is that curve doing. If those yields are still inverted, we're probably headed, the market is probably headed toward the new low. So let me just quickly show you the 10-year. Let me pull up the chart, and I think we are headed back to that 4% mark again. Did have a nice pullback, and we saw that market was able to move up, right, for those days. So I'm definitely still looking for, I think it has a room to go back up to that 4 4.15 or even higher than that, a little bit higher than that. So if we look at, we are holding this trend line upwards very nicely. It has not slowed down that it's going to pull back or any of that. So I would definitely be watching this. If market is going to bounce and you are going to see that because of the earnings are doing better than expected, I would watch how the 10-year reacts to in this zone or how we behave here. And then the other thing you definitely want to keep an eye on is, along with everything else, is your VIX. Right, so this is your VIX. We have pulled back. This is actually the weekly chart, so you can see where we are on the weekly, and these are the levels you want to watch. If VIX starts to get higher than 3280, you can probably, bet that market is going to see new lows. And also, I'm going to repeat again, I've said it in other videos, no market has bottomed out until VIX has gone up to 40. We even saw on Friday, somebody buying March calls on VIX for $150 strike price. And it wasn't for a small amount. They spent almost close to $1 million on those options contracts. So definitely something to watch. And then, we already know the things that are going in the world with Russia, especially this new attack on the bridge. So, and Putin is having a new meeting tomorrow, depending on how they react to all this. Definitely, you'll see that volatility in the market. But these are the levels I'm watching. If we do start to break below VIX on the 2889, we'll see on the SPX and SPY the way we are going to start moving on the other side as well. But this is where we should stop and then bounce back up to it, 2478. However, this level 3280 is gonna be one of the levels that you definitely want to watch how we react to that as well. So, and then I wanted to look at the VIX futures was also showing. Okay, let's go to the daily here. Wanted to show you kind of a similarity what's been happening. So if no bad news comes and there's no nuclear stuff going on, and we start to see a bounce in the market, and if you look back to it, VIX pretty much did the same thing. We literally have identical candles where we are. So we had this run up and we saw the market pull back. We're literally in the same zone right now as well. And this is my 10 moving average. And as you can see, it regained and closed above it. And right now we're at the same place. So we'll see what kind of candles we get and how we behave with that 32 level. And I'm definitely going to be watching how, this kind of takes a turn because of all this earnings coming up. And if we are doing better than expected and market is bouncing, this could have exactly the same setup, and then we come back and move up. Do remember the date, between October 25th to November 5th, in between that week and a half, we are going to see some sort of a volatility into the market, giving us very dangerously new lows, and then having some sort of a turn point. So I'm definitely going to be watching those dates, paying more attention to it and see what's happening. So now let's look at a couple of the charts. Let's start with SPX. All right, so this is the daily chart, and we saw this bear flag, and that has worked out very nicely. Haven't changed much, just added a few more lines to it. But as you can see, these levels were respected very nicely. We did gap down. We do have this nice gap to fill now on the daily going upwards, right? So right there is your gap. I would definitely pay attention to it. We did pretty much came very close to my line that I had drawn last week. I'm slightly off by a little bit. So there is still room, because we are on the daily still below the 10 moving average, that we do decide to pull back and then continue to make new lows. So if we are continue to making new lows, this is what I'm watching, the 3,500, 3,518 area, and then move back up. And these are your gaps to fill. If a market does turn around and you are having these moves back up, I want you to pay attention to it. How does this gap fills, and how do we move to the upside of it? So look at this weekly candle. We are right at the 200 moving average as well too. We did close above, even though the previous week we did close below, but we did end up, those 2 days really helped that we had the nice moves, had the candle closing back up. So watch how we react here. Definitely, if we are moving up, there is a room to come back and test these levels as well. So I'll show you SPY quickly as well on it. So as you can see, I did add new screenshots of where the dark pool prints are. So this is the old one from last week, if you remember it, and this is the new one. So same with SPY on the weekly, we're sitting right above the 200 moving average. At any point SPY starts to lose the 200 moving average, you can bet we are headed back toward and making new lows into the 350, even the 326 area as well. But we did have a decent amount of dark pool print again come at the 360 to 70 level. So watch how we react to the upside from any of these levels. And if we are able to break, and your 365 still stays the main resistance that it needs to break above 365.84, which we tried this week, and however we ended up giving all of it back. And the only saving grace is we are closing above the 200 moving average. So definitely watch how this reacts to it. Right now, anybody who is trying to play longer swings, even whether it's a put or a call, always go back to your monthly and weekly charts to make your decisions. That's where you are going to be able to read the market better than anywhere else. So just looking at our RSI as well, and this is the weekly. We are below the 50 point, and it is pointing upwards. So if we look at the daily is still pointing downwards, and we still have a more room to the come side to be oversold as well. So I'm gonna be watching how we react. I still have this pattern that I think we could follow, lower one more leg down and then move up and then continue to make lower lows. So I'm just gonna be watching that. The one thing I did wanted to go over was very interesting is Dow Jones monthly chart. So if you know me, you know that I'm a big fan of these megaphones, right? So let me actually pull this down, and I'm gonna turn off the indicators so you guys can just see my drawings. So this is my projection, and I'm going to show you exactly why I think of that. So this is the megaphone that we are making right now, right? So this is the monthly chart. You should draw it as well and keep an eye on it, how it behaves. This is the pattern that I think we are going to follow. And my reasoning for this is, and I'm going to show you when we had that Great Depression back in 1932. Look at this. Look at that megaphone, how beautifully it played out. We pretty much, so I'm basically taking this, you can do a measure move from here, copy it, and that's how I got it up to the 2022 drawing of it. This is how we played out. So this chart is literally telling you exactly if the things are as bad as that we are seeing it is, and this megaphone is gonna play out. This is the move we are going to see. So I don't think so we are out of any of the woods. We are still in this bear market. I think the worst is yet to come. So this is what I'm watching for it. All right, so some of the tickers that you guys requested to go over. Let's look at Netflix. All right, so this is the monthly chart on Netflix, and these are this week's screenshots, and this is from the last week. So this week, sorry, this is from the last week, and these are the new ones, the new dark blueprints, and these are from last week. And as you can see, we lost all of these levels, and we are sitting at the 224 right now. And I have not seen any of more of the positive on the green side that you could say this was more on the buying side of it. So I'm still using these levels to see if we are going to get any sort of a rejection on it. So I'll be watching the 228 or the 230 area to see what kind of rejections we're going to get. So this is the daily chart, a little bit more cleaner on it. As you can see, soon as we lost that trend line, we are sitting in a demand zone. However, this demand zone has been used. So this demand is used multiple times now. But these lines are from the last week. As I said, any of the rejections right here would be your entry for a put to the downside. If we break above it, we have a beautiful gap still to fill on it. So, but I do want to see some more money coming into it. And if we do recapture this trend line, we definitely have a room to move back up to it. But I'm definitely paying attention to it, how we behave in this 220 to 224 area. If we are able to continue to kind of go up and down and not really have much of a movement, then I think we're going to have that nice break and come down. But again, if all of these earnings are doing better and we're moving back up, these are your levels to watch and see how we reject and entry for a longer dated put. All right, and then PayPal. All right, so I have two scenarios for PayPal. It is right now above my level, 89.79. So if we stay and we come back and retest this trend line, which is in the 91 and 93 area, if we are not able to cross this 93 area, we're headed back down. I'm not saying it's going to go down in a one straight leg. Obviously, these are my levels. My first take profit would be 81. Next take profit is 67. And the end of this game would be around 40 once all the dust is settled down and we see the market has bottomed out completely. So I'm not saying this is going to happen in the next few days, a few weeks even, but this is my longer view of the PayPal. However, if we break above this 93.82 level, you do have a room. This would be my next take profit on it, on the long position on the 114, 115 area, and then the final should be 127, and then we should start pulling back. So that's what I have for PayPal. And then Snap. Okay, so Snap here is, this is our used monthly. Actually, let me go to the monthly chart first. So, and I did put the screenshots of the dark blueprints on this one as well. Beautiful buys did happen and we are above all of these levels. So I would watch how we react at 1080. If we are able to get above the 1080 level, then you have your monthly supply, which is the $15. That's a good amount of money for a Snap if you are buying a longer dated out to 2024, 2025 contracts. However, if we break below any of this monthly demands levels below, then you can see your next demand, even though this is slightly used by the VIX, however, it could be tested nicely $7 in this zone as well. So looking at the let's look at the weekly as well. And weekly, we do have another demand on the weekly right here in that $7 as well. But as you can see, these demand and supplies work really well. The bounces can be really nice. And as you see, the supply also rejected here. So if we are getting a bounce and you are staying above 1060, definitely has a room up to the $14, $15. And this should be in everybody's budget. However, if we reject here, longer dated puts, those will pay as well. So this is the daily view of it. And let me just turn the indicators on so you guys can see where the RSI on the daily is still below the 50, but I think there is a room for it to turn around it. But this setup isn't the best setup that I would like, as you know, that 3-candle pattern. This could has a more room to come down. However, you are also closing above the 10 moving average as well. So something to keep in mind. All right, let's go to MSLR. I'm actually holding a longer dated puts on this one. We did have, let's go to monthly here actually. So what I'm watching on this thing is how does it reacts into the 130 and 132 area. This is your monthly candle. That's not the beautiful candle that you would want to look for it. So if, the market is bouncing and you are getting this kind of a monthly candle, then this is the drop that I'm looking for it. Pretty high on the RSI on the monthly as well, and it's already pointing downwards. So this is the level that I want to watch, 129.74 and then 132 area. If we are not able to pass that, it has a room to come down, and we have a beautiful gap to fill to the bottoms, to the downside of it. This is the gap that it needs to fill once all is settled. And the RSI on the daily, we're already below the 50 mark as well too. And this is where we had almost $50 million in dark pool as well. So definitely levels to watch how we react. And the candle is already below the 10 moving average. I would like for it to lose the 122.06 first, but nothing no short dated puts. I would be looking for a longer dated puts on this thing. And I think we're going to be printing a new supply on this and break below 122. Nothing is stopping from this gap as well. So that's what I have FSLR for it. I do want to add a few more ones that I think are going to be a good setups for the coming week. Oxy, this is what I'm looking for it. Buffett's been buying this thing. Every time it comes into the $60, he picks up in millions. So I would love for it to, it's already rejecting at this it's fair value gap. So we're already coming down, rejected from it. So if we can come down, and this is a gap. So anywhere between this gap, I would definitely pick up some calls. I think it is more on the bullish side of it. So you do have a room to test this trend line. So that's what I want to watch this on Oxy. And even on the monthly candle, we have closed above the 200 moving average, but this gap, this pullback would be beautiful. So if we can get that, even the weekly candle is really nice. I think this has a good potential to back to the 80, even in the mid 70s. That's a good $10-15 move that you can make a decent amount of money on. All right, so the other one I'm adding to this is coin. So if we look at the daily on the coin, look at where it's rejecting. That's a nice bear flag. I would say that it's getting rejected right here. As long as it doesn't get above 75, any of these zones rejections, you got a room down to the 59, even I would say lower into the 40s mark as well for coin as well. So, and for coin, I always watch how the Bitcoin is doing as well. So something that you want to keep an eye on it, or have these levels, some sort of alerts on it, and see if it gets rejected. That would be a nice put with the time on it. Some bad news for Riven. They are recalling pretty much everything that they made. And this is looking like a bear flag that we saw on SPX actually. So if you look at this, this is kind of the similar setup. So this thing could really pull back. And this is what I have. These are the levels I'm watching on the monthly. 30.70 would be my first take profit, and it could kind of consolidate at 26.85. Since the news came out on the weekend, I would definitely watch tomorrow if it is losing and this trend line below. If we are, coming down below $32, time on your puts, this thing could pay really nicely. And even the weekly, you can see this is looking like a beautiful bear flag that candle on the daily is already below the 10 moving average. RSI is already pointing downwards. So this could set up for a real nice put on it. The other one that we had last week on our, actually for a few weeks now that we've been watching QCOM as well. That was a nice move up. I don't know if anybody caught it, but this is from our last week that we saw, very nice move from that demand zone. And we are testing this back of, this trend line as well. If we are going to reject, which we have rejected, but if it does come back and test the 124 and gets rejected here, has a room to come back down to. And we've made new gaps on it. Look at that new gap. So it has this gap to fill. However, if it does recover and gets above 124.42, if we think that market bounce is coming up, then you have, next year price target is 129.85. I even have it up to the 152.51 as well. However, if it starts to lose the 110, 109 area, has a nice gap to fill on the downside as well. So I would still keep this one on the list. The next one I want to go over is Walmart. And we've been watching this one as well. I have shared it with you guys last week as well. So look at these. I haven't changed any of these lines. It's been respected. Look where we are sitting. Look where we got rejected as well. So as I said last week, any pull up and gets a rejected is an entry for a put. So we're making a double bottom right here. And if it does come back and it stays above, I always like to give myself extra few cents. So if it stays above 127, I want to see this thing move back up to and get rejected in 132, 135 area. However, if we start to move up and you get above 135, then you want to watch how your 200 moving average acts. If we are getting above, your next take profits are these zones. You got a beautiful gap to fill, but if it's not and it starts to come back down, you got your 122, and then your demand is somewhere in the 100, 104 areas as well. So something to watch on Walmart. Let's look at everybody's favorite, Tesla. All right, so Tesla, this is what the move I'm looking for Tesla to do. I could be wrong. This is just based on looking at some of the histories, how things are moving, and if we think we are due to these earnings and we are starting to get, if we make a new low and after that new low we are moving up, this is what I'm looking for. I'm looking for Tesla to reject in the 250, 258 area and then come down. And I have the lowest for this is at the $183. On the live trading, I told you guys 3 weeks or 4 weeks ago, if you take Tesla puts, and I believe I told you guys in the 307, 310 area, out to January, and just buy time on it and make sure, no weeklies or anything. These puts were up almost 170% on Friday. That's where I sold. I'm holding few runners just because my entry is really good, but I'm definitely going to be looking to add more to it. But I'm going to be watching these levels, how we react, because this is a fresh supply. This has not been tested. So move up and reject here. It's going to be beautiful. Or even if it's moving even further up to it, you want to watch and see how it reacts. Am I going to jump into a call? I'll probably scalp it, but I'm not jumping into swing calls. I'm definitely going to be waiting for it to get there patiently and then short it. It is very bottomed out on your RSI, so those bounces are definitely due. So when we are in volatility market like this, it's better to do a day trade scalps on the call side of it, and then you can hold and wait for these levels to reach and look for a put. And it all depends on the ticker as well. The reason for Tesla pulls back $5, $10. I'm in a call and I have a less time. My contracts can die from time decay. So that's what I am watching on Tesla. And these are the things that I'm watching for this week. I really hope this helps you guys. And if you have any questions, if there's anything else that you want me to go over or look over, feel free to, send me a message or comment below. Please do like and share, and let me know if you guys are enjoying these videos, if these are helpful. Thank you. I'll see you next week.